Good morning, everybody. Today's Tuesday, February 10th. I have some economic data coming out right now. Retail sales, this is all from December. These are all December numbers. Backlog from the government shutdown. We also have a potential another shutdown happening this coming Friday if they can't come to agreement on the ICE agents rules and regulations on what the Democrats want versus what the Republicans want coming up. So let's take a look at these numbers right now. Retail sales month over month. These are all December numbers right now, so I'm not sure how that's really going to impact the markets. I don't really anticipate big moves at all, so let's just get right to it. If you're new to the channel, subscribe to the channel. Hit that thumbs up button, like this video, and also hit that bell there so you can get future notifications for other videos coming out. You can go down in the description and join our Discord community where we post videos, educational videos, and we also do live trading from 8:30 a.m. to 10 a.m. Central Time. And currently it is free, so take advantage of it while you still can. So let's get right into our broader markets. Let's go into the ES. Starting out, we always look at our charts. We go I start out with a 4-hour chart. We have this regressional trend line here. This is from August of 2025. Very powerful levels here. You can see how yesterday came right down to this level here of 69.25. Kind of opened up there. And or I'm not sure if we opened up or if we came down. And let me just see where we did. It kind of opened up right at it, right down there at that level, supported it, and popped right through it. And now we are hovering right at some key levels, and I'm gonna pull in a little closer right now. So we've got a December 25th, December 2025 high that it's respecting right now at 69.94. And then I also have this pre-market high of 69.81 that it's respecting right now. So you gotta watch that level right there when the market opens up right now. I think you want to hold this 69.64 when the market opens up in order to push higher here. If you do get a push into the previous all-time highs back in October of 2025 at 7,014, you're going to push into the all-time highs at 7,043. Where I would anticipate you get a little resistance just above that, maybe at 7,065 before you push higher into uncharted territory. We've got a level up here at 7,090, and then if you get through that level, I think you can push through and get to the 72,006 level. And then on the downside here, if you do pull, if you do get some downside here and you lose the 69.64 level, I think you can come back down here and test this January 22nd low of 69.25.62. I think right now we could be in a little bit of a consolidation pattern here for the next few days until they can see what the government's going to do on Friday. But so we could be in a little bit of a range. You had a nice little push yesterday, but we'll see what happens today. I don't see anything too earth-shattering unless there's a tweet that comes out or some kind of earth-shattering policy change that the government agrees upon. So let's get over to the NASDAQ. Again, if you're new to the channel, subscribe to the channel. Hit that thumbs up button, hit that bell, get future notification, and go down in the description and join our Discord community. Same thing on the NASDAQ here. We're looking at a 4-hour chart. I know it looks a little noisy here, but you can see right here we have this regressional trend line here. I have this from August of 2025. We are below the lower end of it. So right now I'm not bullish on the NASDAQ until we can get above these levels here. Pretty key level here, I would say at 25,570, call it. So I would think that if you do get a little pop this morning during the day and you do get to this level, I think you're going to get a little resistance up here. And then, if you do get above that though, there's a nice speed gap here. And what for those of you that don't know what a speed gap is, It's when you have a straight down move or a straight up move with no opposing buy or sell, and it just creates a straight down move, which then on the flip side of that, people will then change their position and then get into new positions on this. So we can go, if that, this is a 4-hour chart we're looking at right now, so we can get to a 15 right now. So if you can get over here to this period where I was just showing you that, that big speed zone right here. So getting into today, if you can get above that 25,666 level, which we're approaching right now, I would say, you could fill this speed zone pretty quickly. We do have some headwinds up there, though. I would say 25,731.75. If you do get there, you can get a little resistance up there. But if you do get some news there, I think you can plow through all these levels here: 25,815, and then to 20. I would say the 25,936.5. And then if you get through that before you get some resistance up there at 26,042.75, and it comes right in with this regressional trend line here that I have from the start of September of 2025, sitting at 26,084. Below that, I would say if you lose 25,053 level, I think you come back down here and you test this February 5th high of 24,960. And then if you lose that, and then you come back down here, test December lows of 24,887.75. If you lose that, I think you're going to quickly come down here and test the September 22nd low of 2025, which is a weekly low, 24,680. If you lose that, I think you come back down here and you test this August of 2025 high of 24,495. That pretty much takes care of the broader markets there. Again, if you're new to the channel, subscribe to the channel, and then hit that bell so you can get future notifications. Hit that thumbs up button, like this video, and then go down the description and join our Discord community. So let's get over to Tesla right now. Tesla had a nice little push in the morning, pretty much all day, and then once we got up to these levels, it struggled at this 419.99 level. Got through it, and then I thought, then it was trying to pull back, and then just kind of hung around this level all day until very late in the afternoon. You got that pullback. However, again, this regression, let me go out to the 4-hour here, show you something a little steeper here. Let me get rid of this, clean it up a little bit. So this regressional trend line here, I have this one drawn since December of 2025. And you can see right now we are hovering right above it. Let me get in the 15 and clean it up a little bit for us. So you can see right here, this white line is the midline of the regressional trend line. We popped above it yesterday, and we are holding above it. So I do like this level. If we do pull back this 415.57 level, I like this level for support. It also comes right in with this the previous all-time high back in 2021, 414.5. This was a big level. It's acted as a big level. You had resistance, and then yesterday we plowed through it. So this would be a great break and retest if we get that chance. So having to come all the way back down here and then retest this level for support, right? So you got a couple things coming into play here. You've got this regressional trend line here. You've got this 414.5. This has been a big level. You could see the way it responded right there, and then yesterday we plowed right through it, right? So it started to give us a little resistance in the morning, and then we finally, popped right through it. So I would say that that's still a pretty decent level. This 419.99, it was definitely playing games there all day yesterday. So you got to watch this level. This is going to be a big level. You could see how it responded over here. It was good support back here on February 3rd. So it was support over here, and then we lost that level, and it came back up again during this level, and then we lost it. So this is another pretty strong level. It's January 2025 high, so over a year and a month ago. So this is a significant level too. I would say if you push higher, this January 30th of this year, this 422.70 low, probably get a little resistance right there, because if it's a break and retest, you break the low and you come back and test it, you probably get a little reaction there. If not there, probably this January 8th, 424.37 low. And then we do have, there's definitely some tailwinds up, or headwinds rather, up here. So there's a whole bunch of different levels you can play with up here. But some major levels that we look at here. I've got a point of control level that I think the market would sniff it out at 434.71. But we are below moving averages here. Here's the 20-day moving average sitting at 429.10. So I think if you push up there, I think you definitely get some resistance up there. Push to that level, that's definitely, whenever you push into a moving average, you definitely, I would say 9 times out of 10, you get a little reaction out of that, right? And then you have the 100-day moving average above that. The 50-day moving average is, the 100-day moving average is sitting at about 438.93, and the 50-day moving average is sitting at 444.56 on the upside there. So I think, getting some nice, higher highs and lower lows, or higher highs, higher lows for Tesla right now. So Tesla's starting to make a little bit of a move right now, but we all know with Tesla, it can have a nice few days, and then it could take it all away pretty quickly here. So this is another speed zone that we talked about right now. I would say that the speed zone will probably fill itself out if we can get up to 423.98. So call it 424 today. So if you do get through that 424, I think you can get some good push to more upside here. So you can go back and you can look at all these speed zones I talk about. When you get these straight down moves, they come back and they fill themselves, like right here. Straight down move fills itself. Straight up move fills itself. They're all over the place, right? Straight up move fills itself. This was an earnings day, so that's pretty common right there. But if you go back and you look everywhere, straight up move, eventually it fills itself, and then that straight down move fills itself back up here. So, it's just like a heartbeat. So, but, that's why it's important. I talk about it all the time. Know your levels when you're trading. So it's important. So now as we get close, when I trade, I have my trading site up here, and then I hone in when I'm actually trading, and I'll go down to a 5-minute, but actually when I'm entering my trades, I'll come down here to a 1 minute. So this is what I'm looking at when I'm actually trading. So I can see when I'm actually entering a trade here. So I'll know, like, okay, let's say the market was open right now, and I saw we pushed below it right here, and we came back up here, and I saw something like this. I would take a short right here, right? And then, you could probably have different levels that you take your shorts to. You take a short up there at 419. Obviously, right now the market's not open, so it's not showing you that big of a range. But that's pretty much the gist of it, right? So normally I would take a short here, and I would go for a take profits, somewhere in this neighborhood right down here. So take a short at 419, go for $4 right here, and maybe have my stop right up here at 420. So I'd have, go for a 4-to-1 take profit, right? So, if you have trades like that, trade setups like that, and I made a video like this the other day, your win rate, if you have a 4-to-1 take profit trade strategy, you don't even need to have a 50% win rate to make money, significant money, as a matter of fact. So that being said, what I do now when I have my levels, I will go to my 5-minute opening range, and this is the basis of my trades. I start off with this, and then I elaborate from there. And so right here, this green area, what you see, this is the 5-minute range. So yesterday's 5-minute range was a 407.29 up to 411.18. So call it $4 range. And then we broke that level, and so the concept is once you break that level higher, if you're breaking the range on the upside, you take a long. And the way I do that is I buy calls for longs, and then if the market's going lower, I'll buy a put for taking it short. So yesterday, for example, so we broke the high yesterday of 411.18, and so you take a long. So now there's different ways to structure that. You could take it on the first break. You can wait till it pulls back down. You take it on a second break on this candle. This gives you more confirmation. This is definitely a better data candle here. It happens after this candle right here is 35 minutes after the market opens, versus this candle here is literally 10 minutes after the market opens. So there's still some volatility, as you can see, even though you could have made money here. So the candle broke the 411, and if you did take that trade, you could have gotten what was the high on that? 413. Could have gotten a couple dollars out of that. But you could see, you're looking for decent moves, right? You could get, you could base a strategy on getting $1 or $2 I used to do that. I used to put a big lot size on and just try to get, 40, 50 cents out of the premium price on the options, and then and then just call it a day, right? But you're putting out a lot of risk when you do that. If you do it, a different way, you put on less of a lot size, and you just let your trade resonate a little more. You're sitting in trades a little longer. So it's all about, what your threshold for pain is when you're trading. So, but that being said, so the break of the range yesterday, 411 was the high side. And, if you were patient and you have a good trade strategy, you could have gotten $10 out of that movement. So how does that translate into dollars? So yesterday, what you're doing here is you're buying the premium. So this premium is expired right now. That's why it's showing 14 cents. So we have, as I made a video the other day also, we have 3 days of expirations right now. So today, I'm going to put on tomorrow's expiration date. And so tomorrow's expiration date is the 11th. So I'm going to change that up. And I'm probably, now we have 2 days to play with instead of just a zero day till expiration. So I can give it a little more room than I did yesterday. So when I trade on a day that's 0 days till expiration, I get real tight to the stock price. So what does that mean? So if I get real tight to the stock price, I want my strike price on my call to be almost right on, if not better, than the actual trading price on the stock, right? So what does that mean? So better means that if I have a call strike price, I want the actual equity price to be higher than my call price. And if I'm using a put price, I want the stock price to be lower than the strike price of my put price. So if it's lower on my put price, that's considered in the money, right? And then if the stock price is higher than my strike price on my call price, that's considered in the money call price. So now on the reverse side, let's say I have a right now Tesla's trading at 419.23. If I put a 420, and I'll do that right now, and I'll show you. If I put a 420 call, here's a 420 call strike price, and the stock price trading at 419. This is considered out of the money call price. Why? Because I want the market to go up, and on a call, if you think the market's going up, you buy calls. Now, why is it out of the money? Because the strike price is $420, and the actual equity is trading at $419. So it's not in the money yet. It's considered in the money when it's trading above my strike price. So in order for this strike price to be considered in the money, the equity price has to be trading above $420. Okay. So now on the put side, I have up here, and I have to change the expiration date till tomorrow. So now the put price I have up here, there we go. So I'm going to lower this to 420. Okay, so now I have the 420 put price up here. So now because Tesla is trading at $419 and change, this is considered an in the money put. Why? Because it's trading below the strike price. Because on a put, you want the market to go down in order for this premium price to go up. So that's pretty much what I'm going to start with today. It could change. So the expiration date I'm going to use is tomorrow's expiration date, which is February 11th on both the calls and the puts. And I'm going to start out, I'm going to start out at 420 calls. And on the put side, I may give it a little more room. I may change that to 415. So if I change this to 415, it makes it out of the money puts. But watch the premium price, because it goes out of the money. It brings the premium price down cheaper now. So now it went from $6 down to $4.10. So what does that mean? That means that my cost to buy these premiums is less. So I can make the same money, but it just costs me less money to actually get in the trade. So that means I need less capital to make the money. So that's the whole concept of it. So anyways, again, if you're new to the channel, like this video and subscribe to the channel. Hit that bell so you can get future notifications. Go to the description so you can join our Discord community for some live trading from 8:30 a.m. to 10 a.m. Central Time. Take advantage of it now while it's still free. Not sure how much longer it's going to be. So if I don't see you in there, I will see everybody tomorrow. Have a great trading day, and I will talk to you soon.